Catrina, great to have you back on.
Good morning, John. Thanks for having me back.
I tell you, there's a lot of crazy things going on in the world right now. The stock market in China, topsy-turvy. That's a mess. We don't know what's going on. The Chinese manipulating currency all over the place. Greek economy in a shambles. The European Union gave them a short-term bailout. We don't know what's going to happen there. That country could collapse economically. They could pull out of the European Union. That's going to cause turmoil. There's all kinds of crazy things going on. We've got 1.5 million Syrian refugees in Lebanon, 1.2 million Syrian refugees in Turkey. That's having a devastating impact on their economies. You know, it seems like investors are running out of places to safely invest their money. So, look, I'm 57. I'm going to be retiring. I'm not going to work forever. I'm getting a little long in the tooth, as they say. So I don't want to make any mistakes, right? I mean, I don't have time to recover. So make me feel better. Are diamonds a good option or what?
I believe so, John. Do you remember the movie My Big Fat Greek Wedding?
Yes. Windex.
Fans of the movie will. Yes. Yeah, Windex. Fans of that movie will love this. The word diamond comes from the Greek word adamas, which means unconquerable. This word unconquerable is so fitting. Diamonds are physically unconquerable, meaning they are the hardest known material in the world. In fact, only a diamond can cut another diamond. But it's also fitting in terms of the value of diamonds as an investment. What other investment can you think of that has had only 2 slight down years out of the last 50 years?
There isn't anything, right?
Right.
I mean, there isn't anything, right? I mean,
absolutely.
That's just the bottom line. Look, when you look at diamonds, I'm a student of history. I say this every day. I studied history. I believe that if you understand history, you can predict the future. That's why my political predictions are so uncanny, and I'm on target virtually 100% of the time. You just got to look at history. Diamonds have only gone down 2 times in a half a century, and both times it was the result of major worldwide and U.S. recession depressions. But here's the thing. They recovered so fast. Why is that?
Right. Yeah, we've seen very impressive steady growth over the last 50 years. We saw 2 minor dips in pricing, as you mentioned, and the years that we saw these minor dips, they won't surprise you at all, John. The year 2000, when the tech bubble burst, and then again in 2008 when the recession hit. When we look at a Rappaport growth chart from 1960 to present, we're seeing a wholesale value of a 1-carat decolored diamond was around $2,700 in the year 1960. Fast forward to 2013, that same 1-carat diamond, the value soared to over $28,000. So $2,700 to $28,000. That's the growth our investors are looking for.
Catrina, let me get this straight. So if you look at this chart, which is available online, the Rappaport growth chart, in 1960, the wholesale value of a 1-carat decolored diamond was $2,700. Now, 2013, it's $28,000. Okay, that is a huge increase in value. What drove that?
Absolutely. Well, some of the things that we were talking about last week, you're seeing steady growth in the demand for diamonds. Diamonds are becoming more and more popular. There was a lot of branding campaigns going on about diamonds, and diamonds are forever. And so the demand for diamonds has steadily increased very, very dramatically, while we're seeing the supply tighten up very dramatically. So, you've got that perfect scenario there of supply and demand, which drives that value up very steadily.
Supply is stagnant, demand is going up, therefore it's going to drive up the rate. That's economics. Catrina, I look at that kind of a return, and, look, everybody would like to have something go from $2,700 to $28,000. That's not easy to do. But you mentioned a D as in dog, the letter D colored stone. What does that mean, and can you elaborate on how quality affects investment diamonds?
Sure. The Gemological Institute of America, which you'll often hear referred to as GIA, established the 4 C's. Many of your listeners have heard of this before, especially if they've ever shopped for an engagement ring. They know what the 4 C's are. This was established by GIA back in the 1940s. And even to this day, their system is the worldwide standard for evaluating diamond quality. The 4 C's are cut. Quality of the cut is really key for sparkle and brilliance of the diamond. Clarity, the absence of inclusions and other flaws makes the diamond rare and valuable. Color, diamonds are graded on a D through Z color range based on the absence of color. So a D stone is considered the most colorless and most rare of all the stones.
Right.
Then when you get down to Z, you're looking at a brownish, goldish tinge to the stone. It's not a nice white stone. And then finally we have carat weight. That's the 4th C. Diamonds are weighed in metric carats. 1 carat is equal to 0.2 grams, about the weight of a paperclip. So very light and tangible, as we've discussed before. Mm-hmm. Here at Dominion, we offer our clients only the top 1% of these grading points. And the reason for that is the higher the quality of the diamond, the more rare it is. So that's where we're going to see more appreciation with those stones. Also, it's important for people to know that all of our diamonds are GIA graded, laser inscribed, and sealed, and this is all for our clients' protection.
So, that sounds great. It's a little weighty for some of us that don't understand how these stones work. I mean, you go to the store, you buy a diamond, and you hope you're doing the right thing, basically. But let's say that someone buys some diamonds from your organization, right? And let's say this is 2015, and 8 years from now, 2023, they want to sell them, get out, they're retiring, or they want liquidity or whatever. What's the process? What would they do? How would they turn their investment and the stones that they have into liquidity in a period of time into cash?
Certainly, folks can sell their diamonds anywhere in the world. We've mentioned before, diamonds hold an intrinsic value that's recognized around the world. But, we're here to make it as easy as possible for our clients. And, yes, certainly we'd be happy to act as a brokerage on their behalf and secure the best possible price for their diamonds on the market at that point. We're very happy to do that for our clients.
So, basically, if I expanded my diamond portfolio when I decided, like, I'm 57, and I decided when I'm 67 or whatever, I want to get out and I need cash and liquidity, I could go back to Dominion Investment Grade Diamonds. You're going to give me a price. I could shop at other places, and I'm going to sell them for the highest I can have, right?
Exactly. Just make sure that you keep your grading report that was delivered to you. Keep your diamond display box and your diamond in the sealed package, and it'll be an easy process.
Diamonds are intimidating because it's not like other things where you kind of have a feel of what it is. If you don't know the industry and you've ever gone into a store and you're trying to appraise a diamond and the jewelry guy puts on that thing over his eye, that big long thing, and they're looking at it, it's kind of intimidating when you don't know the business. So the last time we talked about the fact that Dominion Investment Grade Diamonds has a 100% back, ironclad, money-back guarantee. How exactly does this work again?
We do offer a 100% money-back guarantee. If within 30 days of receiving your investment-grade diamond from us, take it to your local jeweler, have an appraisal done on the diamond. If you're told that the diamond is worth any less than what you paid us for, then you send it back to us and we will refund your money 100%. And we are very, very confident that this is not going to happen, John, because we do offer our clients diamonds at or below wholesale levels. And certainly your local appraiser is going to place a replacement value, which is a retail value on the diamond. So we're very confident this is never going to actually be employed, but it's a safety net for our clients. It's just one more layer of protection. We've got the patent pending process so that we can be sure that our clients know exactly what they're getting from start to finish. And this is just sort of the bow on that to make sure that they feel safe and secure and that they have an out if indeed what they got is not what they had purchased at the beginning. So it's just a safety net.
I think the guarantee is critical because if you're going to invest in something and you really don't have, you're not a geologist, right? You're not a stone person. You're not a jeweler. Then it's kind of intimidating. So I think the guarantee is very critical. Now, you guys have I think you're onto something. That's why I love having you on, because I think this is fascinating. But how did you come up with the idea? How did you originally get involved in this, Catrina?
Well, we've had clients for years, invest in tangible assets, gold and diamonds, and we haven't had many people investing in gold lately, especially since we're seeing the price going down more and more each day. But diamonds are something that we've had folks ask about in the past, and the more research we did, we talked to many folks over at GIA and did our homework. Looked at growth over the years, looking at what types of diamonds grew in value over the years, and really determined that it was time to make this an official offering here at Dominion. So we looked at white stones, round cut stones, and that top quality stone that we talked about. And these are the stones that we've been able to show through the years have really grown with that steady increase in value that we're looking for. We have made a conscious decision to stay away from the fancy colored diamonds, which have been popular in the last 10, 15 years. And the reason for that is we just don't see enough proof through history showing a steady growth. They're in vogue right now, but 10, 15, 20 years from now, if our clients hold these diamonds and want to sell them, are they going to increase as much as the colorless stones? We don't know for sure. So we're putting our money and our clients' money where we know we're going to see the most growth and feel the safest.
Again, Catrina, based on historical fact. I mean, that's the whole thing. I like what you're doing because it's just based on math, fact, and history. And I think when you're basing any decisions on those three things, you're in pretty good shape. I'll tell you the other thing with tangible assets is, if you got into gold a long time ago, you're doing fine right now. But look, and I'm not here to bash gold. That's not my objective. But,
right.
I think I've said this on the air. This is just, again, my narrative, my commentary. I think it's overvalued right now, and I think it's going to settle into about $750 an ounce. And so, personally, for me, I wouldn't touch it. But that's just me, and that's not advice I'm not giving it. I'm just saying what works for me. The other thing is you've got the stock bubble that's going on. When you've got interest rates for your bank around the world, around the United States at 1 or 1.5%, nobody's going to put their money in a savings account or a CD at 1%. So it's driving people into the stock market because of our mandated lower interest rates that are really under what the economic market would bear. All this money is going to the stock market because there's no other alternative. The alternative is you're going to get 1.5% max. So you put in the stock. That inflates stocks. That's why I think, again, my opinion, getting involved in diamonds right now for a 5 or 10 year period is a great way to protect some of your assets. Am I right?
Yeah, timing, John, is perfect right now. When you look across the financial scheme of what are your options, like you said, that you don't want to put it in the stock market. Gold, it's not the time to buy gold right now. Again, just like you, not gold bashing, but gold is influenced by economic pressures, much like, real estate and other types of investments. And so you need to be conscious of when you're buying into an investment like that and when you're going to plan to sell and get out. And right now is not the time to buy into it. So you've got to be real conscious of that. And I think that right now it's just the perfect time to invest in diamonds. We're looking at the demand doubling by the year 2020. Restriction on supply there, so we're looking and enjoying great growth in the diamond market right now, and it is a tangible asset that you hold in your hand. Right. We've talked about how you can travel with millions of dollars worth of diamonds in your shirt pocket. So I think the timing is beautiful for diamonds right now.
Okay, I think you're onto something. For more information, get your free investment kit. It's free. Call 855-351-8910, 855-351-8910, or go to trustanddiamonds.com. Trust and Diamonds, .com, this segment brought to you by Dominion Investment Grade Diamonds. Hey, Catrina, great to have you with us, as always. Have a great weekend. Thank you so much.